Hello and welcome back to Altcoin Buzz. It's me, Jimbo, back for another market update. In today's video, we're going to round up our technical analysis for Bitcoin. We've got 3 altcoins to watch this week. One of them is being scooped up by the whales at an astonishing rate. We're going to conclude today's video with a quick check of this Elliot Wave pattern we're seeing forming on the Dow Jones index. If you like this sort of content, please slap a like on the video. It helps us get the content to as many people as possible. And if you want a chance to win that crypto tag Zeus, start getting our weekly giveaway. Make sure to be subscribed to the channel if you're not already, and leave a comment down below. As it's Monday, we've got our new weekly candle forming. And as you can see, we continue to pretty much range between the 6,500 and 7,300 support and resistance lines. We did briefly last week spike up and test our purple long time trend line, but as you can see, it saw rejection. We've still got our 20 exponential moving average coming down further, and our 50 continues to be quite heavily above us on the weekly chart. When you immediately look at this pattern right now, it looks like we could be seeing a top form, but there's been so much horizontal movement within this sort of area over the last month or so that even if we drop back down to 5,800 in this weekly candle, we wouldn't be entirely surprised to see it come back up and still close between the support and resistance line. As I've previously said, if we do get a close below this 6,500 support, I do anticipate a bigger drop off down towards our long-term red support line, if not this support zone down the bottom here. But we'll have to go down a time frame or two to see if we can get a better indication of which way it's going to move in the more immediate term. So we'll do that now. A quick jump down to the 4-hour chart shows us that we've clearly broken out of the rising wedge that we were forming. You can see the white outer lines here and here, and we've broken this to the downside. We even came up afterwards and bounced out of side of this long-term resistance line that we had formed here from all the way back in the end of February. You can see that we briefly spiked out in what turned out to be a fake out, and we now drop back down into the longer term wedge pattern. Now, we found a little bit of support here at our previous support area around the 6,700 level, and I've just put some more supports here in place for you guys to keep an eye on as I see them. And if we are to continue this downtrend, which is for me personally looks like the most likely now, I'm going to give you the 2 different scenarios I foresee. First of all, we have the scenario where Bitcoin surprises everyone like it quite often does, pushes up and breaks out of this long-term resistance. Then we go on initially to test the 7,400 area, which we know is around the location of our long-term weekly purple trend line. And if we break through that, then we certainly are starting to look more bullish on this chart. However, if we get rejected, then I would anticipate for us to certainly test the upper supports I've got highlighted here. You can see we've got 6,715, 6,480, 6,220, 6,890, 5,640 and 4,600. Now, some of these are sort of oddly specific numbers, but that's just because I'm using actual support lines. You could, that doesn't mean that it's absolutely bang on, but that's where I draw the line, and I've just given you the price that's reflected at that potential support area. Now, will we just drop all the way straight through this? Well, never say never, because we've seen, these big candles before, but I do think we're more likely to see the stepped approach down. I'll show you what I mean by that. And so what you would suggest you would get is something like this. You drop down and say you test the 6,480 level, come back up and find ourselves getting resistance towards the bottom of this area before breaking down subsequently to the next level. And we quite often see this, and you can see it's sort of how the pattern works on the way up. You break some zones, you might say support, and it's not always just straight through one or the other. You can see you get heavier resistance and heavier supports at different levels. So sometimes it might drop straight through one if it's not the most significant support. But for example, this 6,715 support, you can see that we had multiple touches as this as resistance and support. So that gives us a really good indication this is going to be a particularly strong one. So perhaps over the next few 4-hour candles, we trend within this little triangle range that we've got from our long-term resistance in this 6,715 support. And the breakout of this triangular formation is going to be obviously quite important moving forward, because you can see we're up against big support and big resistance, which means that we know Bitcoin's likely to have a breakout. And looking at the volume, we're yet to really see anything too significant that really stands out. We are seeing some selling candles here, but nothing in terms of this sort of volatility that we've seen previously. Let's jump down over to one different Bitcoin chart now, on-chain market analysis at Glass Studio. And what I wanted to show you, this is the mean hash rate and the price USD charts plotted together. So you can see that the orange is the mean hash rate and the price is the grey. And this is not very often a correlated chart. We usually are quite used to seeing the hash rate just increasing regardless of what price does. We know that we had that blow off top of the hash rate up here, but look what happens here. We have the blow off top, then we get the big price decline, which coincides with this huge drop off in hash rate. But look now, the recovery in the hash rate seems to mirror very similarly the recovery we have in the price. And I know we have this big spike here that doesn't quite correspond there, but other than that you can see that it's sort of tentatively pushing upwards like the price is. Now I think this would be really interesting to keep an eye on this, because one way or another Bitcoin is about to break up or down. We know that there's a good chance that we're going to see some heavy volatility in the next move. I wonder if the miners are looking at the price right now in the lead up to halving, and I wonder if they're thinking, you know, they're a bit tentative, but it has come a long way back up from its lows just now. I don't want to make this sound bearish. It has come back up a long way from its lows, the hash rate, and the price actually as well. But with the halving approaching, I just wonder if we see another big sell-off in Bitcoin price, which perhaps might correspond with the other markets dropping down a bit. Will we see miners switch off again? Really interesting to keep an eye on, and I really enjoy seeing these sort of correlations in charts. It gives me something to really focus my attention to. Next up, let's take a look at the first of our 3 altcoins to watch this week, and it is of course Quant. I'm here on the Quant Bitcoin one-day chart, and as you can see, it's had a really nice run up over the last month. From bottom to top, we've run almost 200%, you can see there, and we're consolidating into what looks like the beginning of a bull flag pattern. You can see we've got the long pole and now the consolidation flag. And what I really thought was interesting at the moment is just how well the 38.2% retracement level was holding on this, and if we can continue to stay above this 38.2%, then I think that we could see this play out as a bull flag, and if it does, well, the gains could be huge. Certainly one to watch. Can we stay above this 38.2% level? That is currently at the 60,000 Satoshis level, so that'd be really interesting to see if that holds. Certainly, if it does, it's going to be looking particularly bullish, and any break of this trend line, that the resistance trend line that we've got here, could be the beginning of the validation. Of course, we're going to look for some volume breakout as well, because we're seeing our volume reduce at the moment. So a break of this line, support held at 3.82%, and a break of the resistance with backed up volume, that's going to be looking really bullish for Quant. Second in our list of altcoins to watch this week is Chainlink. Yes, hooray, shout all the Chainlink Marines out there. Take a look at this chart. Couldn't be more bullish. In a previous video, we were analysing whether or not this support line could hold for us, and if we were going to see this after the drop down be a resistance support flip, and that's exactly what we've got, and we've taken back off again for Chainlink. Really, really bullish to see. Fantastic. What I want to analyse here, first of all, I've got 2 charts to look at. Start here on the Bitcoin chart, and then I've got a really unique chart over there on Glassnode that I want to take a look at as well. And that is even more bullish than the price action itself. But we'll start here first. So what we've done is we've gone back and we've broken through this resistance that we set back here in the beginning of February. And we have peaked this once before, don't get me wrong, but it did act as a heavy resistance there. We had 3 or 4 closes in and around the period, so I've put it in place. Now, what I do want to see, if we're about to see Link retrace, is see this level at 44,000 Satoshis hold. And that's going to be really bullish to see if we can keep that in place, and to see if that acts as a springboard again. But the way that Link's been running, who knows if it's even going to drop back down and retrace. We can put this horizontal resistance in place here at around 52. Now that's obviously going to be another test for us. You can see that we've got very close to the area and being rejected. If we quickly jump down to a smaller time frame and say look at the 4 hour, we can see there. Actually, if you look here on the 4 hour, we've got a little bit more clear indication of what's going on with our candle patterns. Now, this isn't the most bullish thing for the 4 hour chart, but we have to be clear and transparent about our analysis, and we could very easily be seeing a rising wedge develop here on the 4 hour. You can see after we've had this big run up here. Very clear parabolic run there for several days. What a really nice bullish chart. You can see there we've got the bull flag breakout, which has then come back down, and now we're starting to see this this falling wedge develop. Now, I wouldn't be surprised if perhaps we break this support and we come back to bounce off this 44,000 level, and if we see that, it's going to be really, really good. And you can see there's on this 4-hour chart, it becomes much more apparent how much volume there is at this 44,000 area, so definitely worth keeping an eye on. Now, onto the other chart which I was talking about, which is the one on Glassnode. Now, this is got to be one of the most bullish charts I've seen for any altcoin in my time in cryptocurrency, based on its current price and how this is developing. So what we're looking at here on Glassnode Studio is the percentage balance of the top 1% of addresses. So this blue line that you're seeing here reflects the whales of Link and their accumulation, and at what prices more specifically they were accumulating. And you can see here that quite low, had a big run up in November 2017, and we flatlined for a long time all the way till July 2019. But look what has happened since then. This top 1% of Link holders are accumulating like crazy. They cannot get enough. But what's the most significant is look at the prices that they're picking this stuff up for. You would think that once these prices get to the $3.50, $4 levels, that you would see the top 1% begin to unload their bags on the holders and start taking profit. That's completely the opposite of what we're seeing here on this chart. We're seeing the top 1%, the Link whales, accumulating this thing at $3.50, and they're still accumulating at $4. This would suggest to me that the biggest holders of Link believe that it is still undervalued even at $4.32. That is a very, very bullish indicator. We're going to do more analysis here on Glassnode on more coins in the future. I hope that this is a useful technical tool for you. I really like using it for my own technical analysis. And when you see something like this, it's just not something that be reflected in the price charts alone. And you can see that this is a really, really bullish indicator, pretty much going unnoticed. The last of the 3 altcoins to watch this week is the daddy itself, Ethereum. Here we are on the BTC Ethereum 3-day chart. Once again, we've been taking a look at this chart. We've been seeing if we've been breaking out of this long-term tightening range with our double bottom area formed. Then, as you can see, the 3-day chart remains above the exponential moving average ribbon. We've almost got our MACD looking to cross over. This is starting to look quite bullish. Let's see if we can hold above this 20 exponential moving average as the week goes on. And if we do, and we see this act as support, and we start to move on up, then Ethereum is going to start looking more and more bullish by the day. Finally, to wrap up the technical analysis today, I want to jump over to the Dow Jones index, as we have seen a daily active trading today. Let's go and see what's happened there and see if we can determine if we're likely to see our 1, 2, 3, 4, 5 ABC Elliot Wave pattern play out, or if that has been rejected by the price action today in the stock markets. To continue our comparison between the 1929 market crash, which led to the global market depression, and this current drop that we're seeing in the stock market, I've mapped out this 1, 2, 3, 4, 5 ABC Elliot Wave pattern. Now, I have covered this before, but we saw in the previous market crash in 1929 that led to that Great Depression, that we saw this pattern play out just like this. We had a 1, 2, 3, 4, 5 ABC correction, and then we dropped off another 45%, and that was what really sunk to the bottom of the Great Depression lows. There are a few more things on this chart which are very, very similar to that same time period in 1929. One of which is that the recovery was more than 50% of the drop. I think we dropped down about 38 or 39% in this move, and we recovered over 20%. Similarly, in 1929, the numbers are lower for the drop percentage and the rise percentage, but the rise was just over 50%, and on both charts we didn't see wave 1 get broken. This resistance at wave 1 that we've got drawn on here, This acted as a heavy resistance in that previous stock market crash, the 1929 stock market crash, which led to the Great Depression. We're yet to break it here. This daily candle is looking quite bearish at the moment. You can see that we've still got 1 hour and 36 minutes left of this Monday candle as of time of recording, but we're back below the 23,000 support level that we've got drawn in. Now, is this the beginning of our move downwards? We'll have to wait and see till tomorrow. If we close down below this 23,000, then we go to test the 20 exponential moving average, and a drop below that is going to see us come right back down to these zones. I wouldn't be expecting an extra 40% drop off like we saw in 1929, and that doesn't mean that it's impossible, but I'd be very surprised if we saw it. But I'd certainly think that if we do start to fail these key supports that we've got in place, that we're going to go back down and test our 5 bottom down here in the 18k level, and we have got this support box still drawn in from our previous analysis. It's going to be a really important week for the stock markets in general this week, and of course that also has its impact on the cryptocurrency market, so this is really important to keep an eye on, because if we do see this break down further, then I wouldn't be surprised if we see Bitcoin follow suit, just like we did previously with the margin calls and people trying to take their values back out of their riskier assets. We could very easily see that happen again, which is why I keep an eye on these markets. I'm not trading these markets at the moment, but it pays to be aware of what's going on. And certainly I like doing pattern analysis, and this pattern is very similar to the 1929 drop that led to the market depression. Let's hope that it doesn't play out. Let's hope that we get a really strong bounce off this support tomorrow and we go and break through this 50 exponential moving average ribbon. More importantly, let's get above this one resistance. That's going to really invalidate the pattern, and then we're going to start looking quite bullish for the Dow Jones again. But at the moment we are not there, and it looks like we are sort of right on the fence between a bigger drop off or breaking back up and seeing some relief for the markets. That's going to conclude the video for today. I hope you've enjoyed it. If you have, please slap a like on the video, and you can follow us on all the normal socials, Twitter. You can check out all the news on altcoinbuzz.io. If you want a chance to win that crypto tag Zeus starter kit in the weekly giveaway, all you have to do is be subscribed to the channel if you're not already, and leave a comment down below. I'll be back later on in the week for another market update. I hope you've enjoyed today's video. Bye.